Awesome. Well, look, Matt, we might make a start as people are dropping in. Thank you, everyone, for joining us today. My name's Soren Reichelt. I'm the head of digital here at Simos Commercial. And we're joined by Matt Brown, taking us through should you buy residential or commercial property in today's market. So, Matt, as I said earlier, thank you so much for making some time to take us through the show today.
Thanks, Soren. Thanks for organising this.
No worries, no worries, and thank you everyone for joining us as well. Um, we're probably tracking at about half an hour, I think, for this webinar today, and it's a bit of housekeeping as well. If you have any questions or anything that you'd like to add in the process, please feel free to ask them in the chat. We will get to them as we go through, but we'll kick off now as people are starting to come in. Now, just a first point, you may have noticed that we've been doing a fair bit of communication around the webinars and bits and pieces that we're doing here to really, I guess, inform our audience of the insights that we have here and the work that we do here at Simos. But if you do have any questions or suggestions that you'd like to send through in terms of the webinars that we're running, please feel free to email them through to digital@simos.com.au. We do review that as a team, and we will take that feedback on board and hopefully hit the mark in terms of some of the webinars that we're producing in the future. So it is a fortnightly process for us. We hope you guys are enjoying that, but certainly provide any feedback if you could. Now, Matt, for those who are joining us today who might not know yourself and where you fit into the business, we've got this slide up at the moment. So 15 years across residential and commercial property, a director here at Simos Commercial. I think the first thing I'd ask is, what do you love most, mate, about working here with the team at Simos?
Yeah, look, good morning, Soren. Look, I think we've got a fantastic team here at Simos, and I'm always very fortunate to be a part of that and be a part of such a great, long-standing team. And I say that because most of the people here have been here longer than I have, and I think it makes us really gel quite well, and we get along very well, and we're always ready to help each other out.
And from the Simos business, so I think it's 34 years now in the business. Obviously, Steve was one of the first to kick off this webinar process. But mate, looking at another point here, consistent results in the footy tipping. How's that going for you at the moment here with the team?
Well, it was a bit down last week, but that's okay. We can always come back with that.
No worries, no worries. And mate, I think one of the key things that we've been talking about is obviously the job or the role that you play, heading up sales and leasing here at Simos, and really working with our clients, prospective and current, in terms of leasing their properties or selling. One of the key things that always interests me is, I mean, how do you really keep yourself up to date across the market and all the different changes to be able to provide that advice out to our customers?
Look, Soren, I think real estate it's more of a lifestyle and a passion. It's not an everyday job, and you've really got to love what you do. And in doing that, you sort of bring really good energy to the team. And when you really love what you do, you're always looking for improvements and what's going on in the market and keeping up to date with the regulations and what's happening across all the different markets of real estate. And that just means subscribing to webinars just like this, whether it be agents, lawyers, REIV, realestate.com, getting all the updates of all the properties that are coming on board for the different suburbs, all the way from Bayside all the way down to Peninsula. It gives you a really good understanding of what's happening in that residential side as well as that commercial side, and it's just a very good interest of mine.
Yeah, well, it says here as well, obviously you're an investor yourself, so keeping up to date both for customers and for yourself. It's been a very interesting time in the market at the moment. Obviously, a lot of that pent-up demand Steve was talking about in our last webinar is now starting to flow through. Have you seen some good outcomes out there in the market, Matt?
Yeah, look, there's been some really good values come across, and certainly in the residential Bayside area, there's been some very strong sales. And in the industrial area and around Moorabbin, Huntingdale, Clayton, Cheltenham, we're seeing some huge results in that industrial sector. So it's certainly doing well. It's very strong.
And very encouraging, obviously, after the past 12 months that we've had as well. And it's actually a really good segue, Matt, because one of the things that we were having a big conversation about all over the past few months is this big question that we wanted to sort of explore for the audience today of should you invest in residential or commercial? Now, when I had asked you that question, we obviously went down all sorts of manners of different areas in terms of what are my goals and bits and pieces like that. But I guess if I ask you that question straight out for the audience, Matt, should I invest in residential or commercial? Share with us the response.
Look, I think it's a very personal choice, but I think the very first thing you need to ask yourself is what's your goal and what do you want to get out of that investment? And obviously, how much capital can you raise? What are your finances like? And do you have enough money for the deposits and the demands of the ongoing costs of that investment? So that's the first area. And once you've worked all that out, then it really can decide which way and which part of the market you're going to go into.
Yeah, and it's. I mean, we pose that question as a very stark choice between both, but obviously a mix of those is often what you see as well, Matt. But I guess looking at that and actually trying to unpack that. I mean, what really drives people towards the different investment areas? So, I mean, what are those things that people use to make a choice between residential or commercial?
Look, I think we, as people, we always grow up as coming out of school, and we're always hearing that residential side. Grow up and buy your first house.
Very true.
How do I get into that? And I've got to raise enough deposit to get into that. And it's a very highly competitive market, the first home buyers. And then as we get a little bit older, we sort of think, are we going to pull money out to, or do we have enough deposit to buy that secondary investment property? Do we go down that residential side? Do we, jump onto the different side and go into, industrial real estate or buy a retail shop or whatever it may be? But I think it comes down to what people's knowledge are and what they've grown up around them in their families, and what business they're in. And I just think it's a hot topic, but some people don't really investigate the other side of commercial real estate.
For me, that's absolutely the case. I mean, I can obviously get onto realcommercial.com.au and have a look at some properties and bits and pieces, which I might think myself could be a good investment. But to be honest, Matt, until I started really working closely with you guys, I didn't really have a big perspective of what the space looks like in those different asset classes. But when I do get onto realcommercial.com.au, I mean, what should I really be looking for? I feel a little naive in that process.
Oh, look! As I said, it really comes down to your goal and what you're looking to do, and maybe you're an investor now, but also looking to occupy that property in future. The demand for industrial at the moment has been very good, and it's been very solid throughout the COVID era, and it's continuing to be that way. The residential side obviously is a safe bet around the bay side. I think you've got to delve in a little bit more into that and say, what performs in the residential? Is it the houses? Is it the apartments? And we all know that the land component is the one that goes up in value. So buying residential houses close to the beach and the bayside suburbs, all the way down the peninsula, is always going to be a very safe bet, in my opinion. But if you're investing in commercial property, that's going to be what you can afford. And is that going to be you're starting in small warehouses? Is that going to be a retail shop? Is that going to be a little office that you can use later on for your own business? That's a personal question, and then that's really determines in your own circumstances.
Yeah, and I think just to draw that point out, this make it really clear for, I guess, the audience, what we're saying there is that both or different areas, different markets have different returns, different goals, different attributes. So as you said to me, that I can't really draw a strong line in the sand, sorry, and I need to dig a little deeper into what it is you're looking to achieve, which makes a lot of sense to me, and I'm sure it makes a lot of sense to the others as well. But one thing that I think is really cool is if we talk about some examples of landlords in commercial, I mean, what do you typically see, Matt, from, I mean, it's obviously varied across different audiences and different investors, but what's the typical commercial property landlord look like from your perspective?
Look, certainly got a couple of different types of landlords, and we sort of get the question quite often as landlords: what should I go and buy in commercial property? What's in demand? What's going to be a very safe bet? If you're thinking of that industrial sector, that warehouse, 100 to 600 square meters is always a hot demand sort of property.
Mm,
There's always someone coming out, starting a business, tradesmen, etc. There's always someone coming down from 800 to 1,000 meters, needing to downscale to either save on rent or save on a bit of capital. Um, so I think it really depends on what people want. Um, what drives those people to do that is obviously their own circumstances.
mm. Yeah, well, absolutely, and I think it's interesting that point of whether it's an investment for your primary business, whether it's an investment for your retirement plan or bits and pieces. There's obviously different areas and different pockets that drive people
That's
towards
right,
that. Yeah.
and depending on the age of the person, maybe it might be that they're younger and they can allow for to buy a property that wants more capital growth. They've got time to let it sit there for 20 years to obtain that capital growth, and certainly that residential side will do that for you.
Mm,
Um, in the flip side, the commercial side will still give you some capital growth, but it'll give you a much stronger return as you're going along. And there's a lot less burden on ensuring that you're covering any difference in rental payments and to the mortgage as well. Usually, that
yeah.
commercial property will pay for itself, and plus you get all those tenancy increases along the years to help cover all the extra costs as well.
Mm. So it sounds like there's a lot to sort of unpack, I guess, in what that commercial investment would look like. There's obviously the different asset classes that we'll talk through, and we'll use some examples later on. But Matt, I guess how do you typically help people in that process when they're looking to, I mean, even just at a leasing level, but at an investment level as well? Um, what's the process you'll typically go through to help advise someone who's looking for, as an example, their retirement income to come from commercial?
Look, I think just to give you a couple of examples of the a couple of landlords and clients that we get quite often. You've got the young tradesman.
Mm,
He's out of school. He's been working for a few years. He's been using the home garage to store his tools and timber, and he says, "Now I need a warehouse." How does he do that? How does he make that happen? How does he raise that capital?
mm,
And what does he buy? And that's a very typical landlord of us, the tradesmen in the small warehouses. On the flip side, you've got the retiree investor that says, I just want a no fuss property,
mm,
and a property
mm,
that is not going to cost me money and lots of maintenance. And that might be, say a brand new warehouse factory that has very little maintenance over the years, usually a strong tenancy because it's in hot demand. And that return is always there, and the tenant's paying all those outgoings. So they're the two um, investors that are really quite popular.
mm,
But of course, we help them through that process, and we work out what their needs, what their wants are, what do they want to get out of it, how long they're looking to hold that property, are they looking to renovate it and flip it, are they looking to chop it down from 1,000
mm,
square meters down into little factoriettes, are they looking for that set and forget, no fuss investment? I just want to buy it, collect rent, and never hear from it. It depends on what they really want, and we
mm.
certainly help them through that process, and then go out and source that property for them.
Yeah, yeah, which is obviously great because I mean you could, as I said earlier, realcommercial.com or any one of those sites that you can go to, it's very easy to sort of see some properties and some returns, but obviously there's a future perspective to that investment because what I'm hearing is commercial tends to be that longer term sustained income and
Longer
return.
term, but also making sure that when you buy that property, is that rent an actual current rental? Is that rent a market value?
Yeah.
And before you go and buy that property because you like the look of it, or it's close to your home, ensuring what are you going to get for it in 3 years' time in rental? Is that current tenant paying a market rate?
Mm,
And if they move out, how easy is it going to be to lease, and what type of tenants are you going to get in the future? And you just need to look at all these things and make sure that you are buying a property that is fitting all those different criteria to give you the best opportunity in future.
Yeah, it makes sense. And I think the examples that we'll draw on a little later in terms of those sort of case points of residential and commercial really start to unpack that a little bit as well. And I guess, Matt, one of the observations that you gave back to me the other day when we were talking about this was how diversification in your own personal, but also in your clients' portfolios really plays a strong part of, I guess, it's almost that wealth creation of being able to ladder in residential and commercial. I mean, do you want to talk through that? How does diversification really work for you and I guess your customers when they're looking at residential and commercial?
Look, as I said before, Soren, I think a lot of people grow up from being younger and they think of that residential side of property. They go and buy their first home. They've lived in it for quite a while. They might have renovated it and said, "Now my family's growing. I want to step into a larger house." Um,
Mm,
Either save for that deposit, they pull money out of the mortgage or get more equity, spend it on that second residential property. Now they've got two properties in residential. If residential goes down, both of those properties are going down.
mm,
Now they might have bought an apartment and a house, so you're sort of a little bit diversifying there. But if you bought a house and then you bought a factory and then you bought an office and then you bought another flat or something else, you are capturing four or five different markets at
mm,
once.
mm,
And as we know in commercial at the moment, just to give it a little bit of example, obviously there's that retail, the office, and the industrial side of it. If
mm,
retail's down at the moment and you've got retail and industrial and it's doing very well, obviously
mm.
you're hedging your bets, you're rolling through all those markets, and there's less burden on you to have everything performing at 100%.
Yeah, and Steve, I mean, obviously in our last webinar when we did a bit of a market update post COVID, Steve was obviously very clear in the idea of where industrial had remained very, very solid through that time, and there's obviously pockets of retail that have different levels, I guess, of where they're performing at the moment. We see some streets in Melbourne
Of
that are
course.
really struggling, and others that are booming, right? So diversification, I guess, has that other level and step, which is not just about is it residential or commercial. It's
Correct. It's
resident.
about location. and,
Yeah.
and properties, and whether it's a retail shop in a small shopping strip or in a very large shopping strip like Chapel Street, or is it
Mm,
an industrial factory in the middle of Moorabbin, or is it down in Mornington? They're all very different markets. They all source very different tenants and buyers. So
mm,
various levels of demand on all of those. And
mm.
as I said, it comes down to really working out who's your tenant going to be in future, and what demand is that going to have.
Yeah. So I guess if I'm to summarize that, Matt, which is, what challenge does this diversification really solve for you? It's really to, remove that stress, I guess, and burden that can sit if you're just playing in one market, which is a little bit like the share market, having one asset class or one portfolio choice in terms of a fund or bits and pieces that you park all of your money, being able to spread that across
That
gets you the least risk. Yeah.
That's right, but it also covers a bit of the financial side as well. If you've got one residential property, you buy another residential property using that equity. You've got to keep funding residential at a lower return. You've got to keep funding and funding, which means you've got
Mm,
to keep earning more and more in your day job to pay
mm,
for two and three different residential properties. If you start mixing that with some commercial industrial property, you're getting a much higher return, and
mm,
you're getting extra. Usually, if you buy right, you're getting extra rent on top to cover more than the loan
mm.
payment is. So you can start to then move that payment across to pay for some other properties, and that's why diversification across there is
Yeah.
just, it's a balancing act, and it's really helping you to stay on top of things all the way along.
Mm. Well, look, I mean, and that's fantastic, man. I think it's really great advice for the audience as well in terms of people that might be looking at commercial to maybe dig a little deeper in terms of what those opportunities look like and where those things are, and certainly reaching out to yourself. Now, Matt, we wanted to ask the audience just a quick poll, and while I'm running that poll, I might ask you that question. I mean, what would you like to invest in most this year?
Look, I think personally, the smaller industrial property is the one to look for. It's going to be in hot demand, but obviously finding the right one, and maybe you've got to look for that little diamond in the rough that you can renovate and fix up, and then pay a little cheaper for. But maybe obviously that residential into the Bayside, all the way down to Peninsula, the housing market there is going very, very well.
Mm.
Um, I watch Peninsula and close to Peninsula very, very well, closely, sorry. And,
Yeah.
it's just getting a feel on things. But I think down there as well, we're going to see quite a bit of increase as well.
Quite a bit of movement. I mean, again, that pent up demand that we've seen, which might
Correct.
be a bubble, but we're not sure yet in terms of residential. But it looks like it's
Look, it
certainly
might
going.
and it might just sort of level out a little bit, but I still think they're going to see increases across the board. And the same with the industrial. We've got so many tenants in retail moving across to industrial offices, getting away from St Kilda Road corporate to come into industrial sectors as well. More and more new businesses are starting. We're seeing lots of demand in that area, and you always need trades. You always need people to go into those industrial properties. So demand for renting them is huge, and that's a very solid piece of criteria to look for.
What's interesting, Matt, is I think we had I've just ended the poll now. We had a really big lean towards industrial last time, and again this time we've had a very strong lean towards industrial. I mean, there's a lot of demand in the market at the moment for not only purchasing industrial but also
But
people
also
looking.
leasing.
Yeah,
As
also
well.
leasing. Yeah, it's interesting. Everyone's feeling that, but there was a couple in office as well. I mean, so Matt, I need you to pick one there. Well, I mean, you'd make the industrial investment, you think?
I'll pick the industrial investment.
Okay. In line with the audience there, which is awesome. So look, Matt, let's I've just got a question that's just come through. With residential, there seems to be a lack of supply. Are you seeing the same thing in commercial? If so, do you see supply improving in the near future? Matt, that's a really good question. Thank you for
It's a
that,
good
Darren.
question, and I think it's a question I'm actually getting quite a bit at the moment from buyers and from vendors. And the supply in industrial and commercial across the board has been a little light on starting this year, and I think it's because we've had lockdowns, we've had this and that going on, we've had markets changing, we've had the
Yeah.
residential waiting to boom. People I think, sitting and waiting a little bit longer to see how the market's going. But the people who have jumped out there now with their industrial warehouses to put them on the market are seeing some really good results. And I just think it's been a bit of a slower start to the year. But I believe, and from the calls that I've made in the recent weeks, we're going to see some property hit the market in the next few weeks after we get over the school holidays. And I think the year will sort of, I guess, start to kick off a little bit further.
Yeah, well, that's right. And Steve obviously mentioned the other week some fantastic results in that industrial space for people looking to potentially move across into residential or liquefy some of those assets and get them out into the market, which is great. So
You might also find some residential people selling with the new rules around leasing and managing residential property, maybe switching across to industrial and commercial property as well. So that might take effect in the coming months as well.
yeah, which is exciting. So it sounds like it's going to be an interesting year in that space, Matt. So look, we wanted to do a bit of a case point here. Excuse me. Just about, I guess, Simos predominantly Bayside. So focusing in the Bayside area. I mean, that question of should I invest in residential or commercial, we know there's some goals that sit underneath it. But just in this example, Matt, and we'll go through some numbers later on. I mean, if I took 1.5 million, I had that burning a hole in my pocket and said, okay, I'm going to go out there and make an investment 10 years ago in Bayside residential. Do you want to just talk us through these points of what you typically would have seen in a property? Obviously, apartments are different, but in a
Yeah,
residential
look, if
property
you
in that area.
bought a house in Baysides, the Beaumaris, Sandringham, Brightons, whatever it may be, Mentone, in the last 10 years, I think you would have seen between 2.5 times that value. It certainly has been a very strong sector. It's always been in hot demand to lease those areas. Buyers are very strong. You would have had a strong tenure, would have had like very minimal vacancy rates in terms of that property. So, look, yes, the return's a little bit lower, but the capital growth in that area is going to be very good.
People have obviously seen fantastic growth in those areas, and obviously being able to use that to then make further investments. You can see
Correct.
that's how people build that wealth profile. Now, we do have a question here from David about what is the typical return you would consider as a base in commercial. We'll get to that in a moment as we go through the example here, David. But thank you for your question there. So, Matt, let's look at, I guess, the other side of that, which is our commercial market in Bayside. So, just for fun, because I mean, there's obviously different areas we could look at office and retail, and that's a bit more complex. But at an industrial level, if I had have invested that same amount of money in the market, what would I've typically seen from the commercial side is in terms of a return?
Yeah, look, commercial inside and industrial, it typically, then we'll take the suburb from Moorabbin or Cheltenham. We typically say that you're going to get between 5 to 6% return on that industrial property. If it's a hot property in the middle of Moorabbin, um, you might get a little bit lower. You might get into the fours. So, but in terms of capital growth, as you would have done very well at the same time, and but you are getting that longer term leasing. You're getting less maintenance in those properties. Tenants obviously take care of that, or most of that, and you're also getting a good yield, so you can afford to either use that extra cash flow to fix up the property a bit more, or you can put that into other investments.
And I guess we sort of glossed over office and retail. They're obviously two very strong classes as well, Matt. I mean, what's the complexity there for us in terms of answering, I guess, definitively in those areas?
Look, I think the office world, the retail world at the moment is a very changing market. I don't think we've seen the extent of how much we're going to see it change yet. I know that the COVID Act has sort of stopped now, and things are starting to change, but shopping centres, strips all the way around the place were all very, very different. The smaller shopping strips are actually doing reasonably okay, whereas your Long Hampton streets, your Chapel Street, your Glenfair roads are very much struggling, and without actually going into a particular shopping strip, I don't think you're going to be able to give it an exact answer. And I don't think it's the right thing to do, to just blanket retail and office, because it's very different at the moment. We're seeing lots of people come from those inner city offices down to outer areas where they actually reside, and going, well, I'm not going to travel into St Kilda Road anymore, or spend an hour in the car travelling to the city.
Yeah.
I just want an office close by, and I'm going to pay half the rent for it. So I think that those outer areas of office, we're going to see a good amount of demand, especially that 100 to 200 square metre. The 50 square metre offices, the 70 square metre offices, I think are probably not there just yet in terms of having good demand. People are still deciding, if you're in a 50 square metre office and you've got one person at home, two people at home, do I need to go and then spend another 15, 20 grand on an office for leasing it, or another $300,000 to $500,000 buying it? And that's probably the market that needs to sort of shift a little bit before those markets will really turn around.
Yeah. Well, a lot of people obviously shut down certain costs
in general terms, and we'll talk about this all day in terms of sectors, but just in general terms.
Yeah, absolutely. So look, we wanted to lay that out because I think last time, Matt, we covered that off, but didn't really get into the two different examples here of, let's look at that residential property and industrial property investment, predicated on the fact that this is just a very general example. Obviously, different properties, different locations will have that.
Correct.
Talk us through this this net return at the bottom that we're seeing from both over that time period.
Yeah, like I said, it's a very generalised example. I mean, obviously, different residential properties, different industrial properties are going to perform differently, whether they're new, they're old, in different streets, etc. But if you're looking at that residential side, typically by the time you pay all your outgoings and you got rent in the door, you're going to be in that mid to high 2% mark. Yes, you might be a little bit higher in different areas. If you go further inland, and you might be creeping into that 4 and 5% mark if you're lucky, in those really, really outer areas and new estates. But you won't get the capital growth out there. But the industrial side, obviously, between 4.5% to 5%, I think at the moment is pretty normal.
Yeah, so obviously that would drive a very different result given the goals that certain people have, and maybe residential was the primary focus, but not necessarily seeing that return unless you make the sale or if your goal is to grow.
And just one more note to say that obviously you're looking at a $1.5 million value there. I mean, that doesn't take into account if you've had to bid at auction between 20 or 30 people and you've dropped at the price and you paid 1.7.
Yeah.
So it just really depends on the property, how you've bought it, what you've bought, what's the value that you actually paid for it.
No, it makes a lot of sense, and thanks for talking us through. I mean, the clear there is obviously the difference in maintenance, but also even just through COVID, I think a lot of landlords in the residential space certainly took a different perspective on terms of your traditional bricks and mortar investment, and what those returns would look like given the 12 months that sort of people were on reduced rents and bits and pieces as well.
Correct.
So, Matt, I guess the final thing here is, we were starting this webinar on residential or commercial. What should you buy? I mean, what are and we've listed them out here, but what are the tips, I guess, and the process that you suggest for people who are assessing their options? What's the process you'd go through?
Look, I think number one, as I said at the very beginning, is to work out your goal. Work out what you want to buy, what return you want. Do you want high return? Do you want capital growth? How long are you going to hold it for? What areas can you afford to buy into? How much
Hmm.
money you've got to spend? Can you afford to put up that deposit, as well as carry on those extra costs for that investment? Um, Once you've worked out that, you obviously you've got to work out how much money you can properly afford to pay. Um, you build a plan, and then you come and see us and help us. And obviously, we can talk to you from point number one to help you work out what your goal is.
Hmm.
We can come and see you at point number three. It doesn't really matter, but we're sort of open to helping you at any stage that you need and providing our tips and advice on doing that.
Yeah, and obviously in your extended network, Matt, working with the different legals, the accounting, and the wealth planners and bits and pieces to help with that advice. If people are looking for those types of relationships as well, you can certainly direct people to the right spots with that experience
Absolutely.
as
We
well.
surround ourselves with a team of experts as well. So not only you're going to hear it from us, you
Mm.
can get the opinions of the financial advisor, the lawyer, and even your local accountant, and just really work it out and suss out what is comfortable for you.
Yeah, and make that advice. So the key message there, Matt, is obviously reach out as early as you can to
Absolutely.
help in that advice process. And
Always happy
um,
to help, and then hopefully we're still talking to the same clients in 20 years' time, and they've built a huge portfolio, and everyone's happy.
Awesome. Awesome. Well, look, thank you, everyone. Thank you, Matt, so much for taking us through and answering all of those questions today. Thanks, everyone, for joining us. Again, as I said at the beginning of the webinar, if there's any feedback or anything specifically that you'd like for us to talk through, digital@simos.com.au, certainly reach out. We are running these fortnightly, so you will continue to get those notifications through your email, but also on our YouTube channel. We'll post this out there, and we'll share that link to everyone as well. So thanks, everyone. Have a wonderful week ahead.
Thank you, Siren. Thank you, everyone.